Ripple's dispute with the US Securities and Exchange Commission, or SEC, is nearing the end of what seems to be the last phase of a 3-year legal war. Financial institutions, cryptocurrency specialists, and XRP holders are all keeping a careful eye on things. The cryptocurrency community is ablaze with predictions as the courtroom drama draws to a close. However, how do the real legal roots appear? What would happen if Ripple prevailed? What if they agree to a settlement? What if the SEC achieves a surprising legal triumph? In this video, we're dissecting each plausible situation based on financial reasoning and legal reality, not on hype. Without getting bogged down in legalese, let's start with a brief summary of the case itself. The SEC filed a complaint in December 2020 claiming that Ripple Labs sold XRP in an unregistered securities offering. The main contention was that XRP operated as a security under US law, particularly in its early years. In response, Ripple asserted that given its current usage, XRP is not a security and operates more like a commodity or currency. In July 2023, Ripple achieved a partial victory when Judge Annalisa Torres declared that XRP transactions to regular investors on exchanges were not securities. But that was not the end of the case. The judge permitted the institutional sales case to continue, allowing for additional litigation and appeals. We are currently in what many refer to as the last round. Final fines are being negotiated, important motions have been filed, and a symbolic 90-day countdown clock has begun. What are the potential results then? In scenario 1, Ripple prevails. It would mark a turning point for Ripple and the larger cryptocurrency industry if the judge rules in favor of Ripple completely, even with regard to the institutional sales. After years of ambiguity, XRP would be categorically declared not a security. This result would probably cause XRP's price to spike right away, maybe reaching double digits in a matter of hours. More significantly, exchanges like Coinbase and Kraken that have previously delisted XRP would feel comfortable relisting it. Believed a surge of new institutional and retail demand would result from improved liquidity and accessibility. A successful outcome in this case also establishes a standard for future SEC crypto cases, reaffirming that digital tokens are not necessarily securities when utilized and sold appropriately. Settlement in scenario 2, the SEC and Ripple decide to reach a negotiated settlement to address the outstanding problems. From the standpoint of legal strategy, this is the most likely result. Both parties can usually save face through settlements. Ripple receives operational clarity, while the SEC obtains a punishment of some kind. In this instance, Ripple may consent to provide specific disclosures or impose limitations on future sales in exchange for a fine, possibly less than the initial $1,300,000,000 0 cents claim. The market would experience instant respite as a result. However, the market's response may be delayed because the specifics of the settlement structure and the future state of XRP could be crucial. Price volatility may ensue, contingent on how the public perceives the situation. However, finality is the main benefit of a settlement. For the first time, investors could concentrate on XRP's potential rather than its legal issues. A difficult one is coming out now. In scenario 3, the SEC prevails. This could result in Ripple being found in breach of securities regulations and institutional sales of XRP being determined to be securities. Although this wouldn't result in XRP being prohibited or going extinct, it would make Ripple's operations in the US more difficult. In the short term, it may also result in a wave of delistings from US-based exchanges, limiting liquidity and pushing prices lower. However, it's important to remember that XRP already enjoys legal clarity outside of the US, notably in the UK, Japan, Switzerland, and the UAE. Thus, institutional acceptance and worldwide use cases would persist, albeit with a greater state compliance burden. Nevertheless, there are distinctions between Ripple as a business and XRP as an asset. Holders of XRP are not held directly accountable in the event that Ripple is penalized. The usefulness of the token remains intact. However, there will be a greater sense of risk. How can holders of XRP safeguard themselves in the worst case scenario? Diversification is the first. Keeping a variety of assets such as stable coins like USDC or USDT might help reduce downside risk because cryptocurrency is inherently volatile. Using put options on platforms that offer XRP derivatives is another sophisticated tactic. In the event that a surprise ruling favors Ripple, this allows holders to protect themselves from possible losses while maintaining exposure to gains. Let's now discuss an important yet frequently ignored topic, the global operations of Ripple. More than 90% of Ripple's operations take place outside of the US. Ripple has kept up its rapid growth, landing fresh agreements in Europe, Asia, and the Middle East, even as the lawsuit was pending, particularly in remittance-heavy But corridors like those between Mexico and the United States, or Japan and the Philippines, RippleNet and on-demand liquidity, or ODL, have seen steady growth. This indicates that the company's survival and success are not only reliant on the resolution of this particular litigation. A negative decision isn't a death sentence, but a positive one would be fantastic. Legal clarity equates to a price explosion, which is yet another significant fallacy. A victory would lift a significant obstacle for XRP, but it does not ensure immediate $10, $100, or $10,000 0 cents prices. Such change is contingent upon long-term market sentiment, real-world utility, and ongoing demand. Legal clarity can be compared to clearing a roadblock. The car still needs gasoline, guidance, and help to move forward, but it makes advancement possible. That fuel comes from Ripple's alliances, business fundamentals, and worldwide regulatory movement. Clarity in the law just makes things clearer. It's also important to talk about how this issue relates to more general crypto laws. With measures like Fight 21 gaining support, the US Congress is gradually moving toward complete crypto legislation. Although it has not yet become law, that bill provides more precise distinctions between digital commodities and securities. Regardless of the case's outcome, if it is approved, it might support Judge Torres' decision and provide XRP with more legal footing moving forward. Let's finally discuss strategy. Your strategy for owning XRP today will rely on your investment horizon and risk tolerance. It is important for short-term traders to be ready for both types of volatility. The wider market will not ignore the outcome of this case. Long-term holders may view this as the result of years of persevering through uncertainty, fear, and FUD. The true test, however, is yet to come. What XRP can accomplish when legal headlines no longer limited. In conclusion, the Ripple v SEC case is a fight that could influence how digital assets are seen in the US for years to come. It is not simply about one business or one currency. XRP's journey continues beyond the courtroom. Regardless of whether we witness a complete win, a negotiated truce, or a challenging defeat, the long-term drivers of value will be the foundations, utility, acceptance, and practical use cases. You can easily find buzz on social media if you're looking for it. Stay tuned right here, though, if you're looking for clarity, legal knowledge, and a workable plan. To ensure you don't miss the next development in this momentous legal tale, please hit the notification bell and like and subscribe for future crypto case updates. If you found this breakdown useful, the last batch of XRP is here. Are you prepared? Disclaimer: this movie is solely meant to be informative and instructional. It isn't financial guidance. Before making any investing decisions, please conduct your own research and speak with a financial advisor.